Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, April the 29th, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30 and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High level overview, wave one is done, topped out at 114.72. We're working on moving lower in wave two. The bias is we're going to get a deeper retracement toward the 80s area. And so far, we made it down to about 97. And so far, it's holding. But again, we always said from this 3 years ago, we said this would take multiple years. And if we're going to get down this far, which is the plan, we're probably going to take several more years to get down there. All right. So looking at the 4-hour and software chart, we could see we're just kind of grinding in the zone. The bias was we get lower highs, lower lows. We've been seeing that going way back. We get some lows, we consolidate, a little lower high, lower low, lower high, lower low. And we just, obviously this is a downtrend looking at from the upper left corner down to the lower right. And that is the plan, higher time frame, same thing. We're seeing nice little stair step lower and lower and lower. We broke out the lows, making new lows. Now, is this over and we're going to go a bit higher, or we still need to start breaking down further? I'm not convinced we're ready to go breaking lower just yet. We may, in fact, see some sort of little push up to another lower high, lower low. But needless to say, we've been talking about it for quite some time. Lower highs, lower lows, lower highs, lower lows. And this rally into this zone is no exception. So far it's holding. Let's go to the charting platform over here on the dollar index. And we could see based on the 4-hour, we're below the Magic Fibo line. That's going to be resistance if we can get up that high. So far from the low to the high, we're right in that 618 zone. So as long as we hold this, we're probably going to go up a little higher before we fail. But if price has another thing in mind, it's just going to break down. We start closing back below this 98.30 area, bottom of this pink box. Then we could target some new lows down at 97.60, 97.38. Breaking the prior low up here at 97.90 area. All right. So I can't say we're definitely going to go up here, but since this low reversal, we're holding above the 618 retracement zone, and that remains bullish for us to go a little bit higher as long as we remain above this 618, 786 zone, which is the basically the middle to the bottom of this pink box. All right. So looking at the daily chart, we see the same type of picture that from this low to that high, we're holding a 618, but we're well below our Magic Fibo. And the probability we go breaking above that right now is low, and the more likely we're going to push lower. Amen? So main reason for that is we had this bigger move from this recent low to the high. We broke this 103.90 area, which set the tone. We were going to go where? 98, 97, and sure enough, that's where we stopped and we're bouncing at the moment. So if we start to break a new low, then 94 becomes an open target with some support around 96, 95, 94, etc. as you get your Fibonacci extension ladder moving lower. But this would be the next big move after reaching target one, target two. Typically get some sort of bounce and then a lower high, lower low as we start moving toward 94. And if we start breaking that, there is some support in these zones, but then it opens up 87, 84. And this is kind of the area we believe we're ultimately heading into the mid to low 80s before we're done. But remember the bigger picture from this move right here, that we're not expecting the dollar to go crumbling all the way to make some new lows over here and make new lows. We're looking for a wave two retracement. And we just recently, from the prior low back in May of 2007 at 70.53, 15 years later, when we were talking about reaching our destination one, which was between 115 and 120, we made it to 114.72. So when you talk about a target years and years in advance and it goes that close, that's pretty accurate. That's why I love Elliott Wave, among others. But Elliott Wave and our Fibonacci's and the software and MPAPE5 version 5.0 software, that's all the winning combination. So we know this is going to be a wave two retracement. And typically super cycle wave twos or deeper retracements. That's why I'm pushing more toward a 786 than just your typical sweet spot. So far, we have reached the 38.2. I do think we're going to go lower. This bounce should make a lower high, lower low, right? That's kind of what we're thinking. But there is a technical snafu here. If you look at the higher time frame, so like a weekly, and you look at this recent low to the high, and this was the COVID lows over here back in 2020. So from that low to that high, which was the 114.72, we're resting and supporting right at a 618 level. Amen? So that is the snafu. James, if this holds and we start breaking back out, it sets the tone. We could go to 117, 120, even start to, if you look at this low to that high, and this being a higher low measured bounce, as we like to call it, a 618 retracement bounce, then it sets up, we could go to maybe 120, 130. This would be a high probability target. If this bounce holds and we go breaking out, then there's your targets way up here. Shorter term targets, we start breaking above from this high to this low. We start getting above 110, 108 area right there. Then we start targeting 117, 119. So this is why this is interesting times that we came right to the 618 and stopped. We've been bouncing and kind of holding this zone for the last week or so. That doesn't mean we can't make a lower high, lower low and continue the journey down to the 80s like we're thinking. But it is interesting, it's stopped right there. So I'm not real bullish to say, ooh, the dollar's going to go ripping higher and we're going to get to this 130, 140. And if we start breaking those zones, we might even go to all-time highs. Wow, is that possible? Anything's possible. But so far, we expected the dollar to have a big retracement. So far, we have from basically 114.72 down to 97. That's a pretty good retracement so far. But the cards in Elliott Wave wants to look for an actual deeper move. And is this over? Well, we got certain lines in the sand we should not cross. If this is going to continue down, then we can't really go breaking out, right? That would mean this wave two is ending a little short, and then we look for a big move up. But long term, this picture, even if we do make it down to the 80s, like we've been thinking, we're still going to look for a big surge in the years to come. That's based on Elliott wave. And 1, 2, after the 2 is over, what do we go up in 3. And that 3 is likely, obviously, going to make a new high above that 114.72. But that, again, could be years away. We could still talk a few years to get down to the 80s and lower. And then once we reverse there, it could be multiple years before we go breaking above that 114 and start shooting into this upper quadrant. So I still think we're ultimately going to get up here, but how far down do we go before we reverse and get up there? So I know this could be multiple years before we get up here. What kind of fits last time the dollar made this big surge is when we were in the midst of our crypto winter, right? We had halving in 2020, and then we had our halving in 24, and then the next one will be 28. Talking about Bitcoin halving. And during that halving, once the winter period started to drop Bitcoin, and we were topping in that 21 area, mid to late 21, then what happened? As Bitcoin was plummeting from 60,000 all the way down to 15,000, the dollar started strengthening and going all the way up to 114. Not always a perfect relationship when we get in Bitcoin winners, the dollar's going to go ripping, but we're expecting Bitcoin to top out late this year, probably September, October. So as we get into 26, from late 25 going into late 26, and we get the Bitcoin winter in here, this dollar could go ripping to make some new highs by then. So this is why I'm watching this closely, see how this plays out. Or do the next several months we continue to plummet down into the 80s, then we get the reversal going into 26, 27, and then to next halving in 2028. We shall see. All right, so any questions on the dollar index? Again, some critical, absolute critical levels. And if we could take this bounce seriously, we need to see this thing start ripping much higher from the high to the low, which is off of this chart over there. We need to go up considerably higher. So I'm going to move a couple of these little things for a moment and just show you what this looks like. From the current high, recent high, to the current low, we'd have to start breaking above this green box, which is above 103.99 area. And then you see from that high to this low, we got two boxes. Here's my 618 right there. From that high to this low, Ian, we're talking 105. So before I even start getting somewhat bullish, the dollar, we need to break above the Magic Fibo line, and we need to clear the hurdle of basically 106, 107 level. So I really can move this box up there. And that's just from current price action. This would be pink because its resistance is definitely going to be resistance when we get up there. But in order for us to start getting bullish, well, Gary, we got from the big picture that low back in COVID to the high and this pullback at a 618 hold. If we start getting bullish and you think the dollar is going to go breaking some all-time high, not all-time highs, but some new highs above 114.72, then we got to start to see this thing rip higher and get to above 105, 107 area, this pink box. Then when we do that, we still have a big resistance zone above that. And then finally, when we clear that hurdle, we could start focusing on 117, 119. And before we start focusing on 117, 119, my target would be 111, 113. And that's still below the previous high of 114. So you can see the kind of hard road this dollar index would have before we start breaking out to new highs. And I don't mean all-time highs. All-time highs is about 160 and change, somewhere around there, 161. So we're talking new highs that we haven't seen since here in 2022. But we first got to get above 105, 107. We do that, then we have a 75% chance we're going to go visit 111, 113. That's still below the previous swing point. So if we then take that out, then yeah, 117, 119, onward and upward we go. But that's why Emil and others, I don't think this is done to the downside. That's not the plan for us to get to 97, stop, and go breaking out. But I did want to call your attention to that technical picture from that COVID low to that swing point high of 114 and change that we're holding right at a 618 retracement. And that potentially, and I say potentially, could be very bullish to the extent we start looking for moves up to like 127, 130. Where does this number come from? That comes from this low to that high to this higher low, right? If this is going to be that 618 bounce, we call a measured bounce. Why is it measured? Because we can measure it based on Fibonacci extensions and retracements. We retrace the 618, then the probability we grind back towards this 1448, 1272 level becomes a 75 plus plus, maybe 70 plus plus. We get up here, but before we even start contemplating that, we got to get above this pink box at that 105, 107. Then we can start targeting 111, 112 ish, which is still below the 114. So is it possible this could be some weird looking A, B? We come down in A, we get a weird looking B, come up to a lower high, then we still get to push down here. Yeah. So it doesn't mean if we start getting here, it's a done deal. We have to take this high out. We take the high out, then obviously the door's ajar to go to 117, 119. And based on if it holds this level and we do get up there, then this really becomes a very high probability target. Amen? So pay me now, pay me later, whether we get down in the 80s, that's why I keep going back to this chart. Even if this is the retracement where we ultimately end up somewhere in the 80s down here, well, once 2 is over, where do we go up? 3. Where does that take us? Above this swing point. So this is not wishful thinking we're going to get up here. I think ultimately are. The question is that wave 2 going to give us the deeper retracement into the mid to low 80s, or we're going to get a measured bounce, hold around the 90s, and go breaking out early? Well, the timing of the charts, like I was showing you over here, when we went to the last Bitcoin halving, and we were doing the crypto winter low, and Bitcoin was plummeting from 68 plus thousand all the way journeying down to 15,000, the dollar started ripping. So maybe we get this pushed down, and then late this year into late next year, 2026, do we then see a reversal and we start seeing the dollar rip again? Food for thought. But that's what happened last time. The dollar got real strong when Bitcoin went plummeting. Well, we're going to get to the markets, and that would fit the tone as well. When our markets start crumbling, that is going to be an interesting scenario, that it's the whole marketplace. That Bitcoin goes down post 2025, late September, October, into the fall, we start crumbling. We get a blow off top on the markets, and we get that, Elizabeth, I'm coming to join you, honey, going into 2026, etc. Is it all going to work out? And at which point the dollar goes ripping? We shall see. All right. But that's food for thought. We're holding a 618. So until we start breaking well below that, then we start targeting 94. That doesn't hold. We start targeting 87, 84. And ultimately, this is what we're thinking, into the mid to low 80s is where I think this is ultimately going to end. That's what we've been calling for. So are we going to go breaking out, or are we going to get a deeper retracement? I'm still going with the deeper retracement until price proves otherwise. As long as we remain below 109, we remain bearish. As long as we remain below 114.72, obviously that's over, and we're working on wave two. So I would say this is done. And the only question is, how deep is this going to go? And from 114 to 97 is a decent retracement. It's 38.2. But that doesn't fit the mold for a typical wave two retracement. That is, we're talking super cycle. They typically go deeper. But there's always some exception to some rule somewhere. So I can't say, well, I guarantee there's no way we're going to go breaking below this and head lower, that we're definitely going to go higher. It's possible, but it's extremely low probability at this point. Till price proves otherwise, this is more likely than we go breaking out at this juncture. And why is it important we always look at the dollar index? When you know where the dollar index is headed, you know where a lot of asset classes are headed. Limited but not least is Forex, right? We certainly know that the euro dollar is the most commonly traded currency pair, and it's exactly inverse to the US dollar. Why? The dollar index made up a basket of currencies, and the most predominant currency in that basket happens to be the euro dollar, being the most commonly traded Forex pair. And if you were with us over the last several weeks, then we talked about buying and this calling a bottom here, and we talked about these targets weeks and weeks and weeks in advance. And we said once we cross that 108 target, which we talked about buying and going along to that point, taking your profits in case it decided to get rejected and go lower. Well, it didn't. And boom, next thing you know, we're at our targets. So what's the next target? 118.50. What's after that? 125, 128. The dollar keeps declining. This euro is definitely going to keep going higher. So we've been saying this for many years now. Should the dollar get down here, the 80s area, then the euro dollar is clearly going to go all the way up to this 140, 145, which is still thousands of pips away. And if the dollar goes to 80 area, like we've been projecting, anticipating, with GPA Trading Services, we don't predict. Everybody predicts. Weatherman, every Tom, Dick, and Harry, everybody has predictions. Well, I'll leave that to the prophets. I can anticipate, I can expect, I can do a lot of things with the best of them, but I don't use the term prediction. I do not predict things because I leave that to the prophets. And as accurate as some of my calls are, I still admit I'm not a prophet. But I do read, interpret price with the best of them. It's a God-given talent. So should we get to the 80s, the euro will definitely go to 140, 145. That's the plan. Well, if we go to the 80s down in this area for the dollar, then the pound dollar is going to go all the way up to this 160 area, 160, maybe 165. Which again is still thousands of pips away. So 3 years ago, I called this bottom and I said, man, you need to go long. This is incredibly opportunity. And we weren't expecting this to go reversing, to go breaking all-time highs up here at 211. We're just expecting a 50/618 retracement. And that's typical for these type of long, multi-year, this decade plus down move, that we get a multi-year correction before then moving lower based on our Elliott wave on this. So I do think, as we always do Elliott wave on Tuesdays, here's the euro dollar. I got it all set up. What are we doing right now? We're simply appearing to do an A up to a B. And once that's done, we come back down in C. Well, doesn't that fit the mold when I just went over the dollar index? The dollar should decline further into the 80s, which would allow the euro to go up further into the 130s, 140s. And then when we get the reversal and the dollar starts bouncing to go breaking out to that 127, 130, etc., higher highs, then the euro is going to go and make a new low below this A, which right now is at that 0.95. So again, multiple years up, multiple years down. This may not end up down in this zone. We could be into the 2030s. So we're talking many years. Amen. But that's the plan. And as we were talking about this buying reversal, made 1,000+ pips. We pegged these pullbacks, even this most recent one, and look at the move from basically 102 up to 114, 115. Not too shabby, and I don't think it's done. Still got thousands more to go is the plan. Well, what if this holds and we do get the rejection? Then we get that shrunken wave 2 correction and the dollar starts ripping higher, then we're going to get a shrunken version of this euro correction and we're going to go much lower. So until price proves otherwise, I'm going with we're going higher before we're ready to go breaking down and making new lows. But that is in the cards. Once B is over, we do go down in C and we are expecting to make a new low below that 0.95. Amen? All right. And the pound is just inverse as far as with the dollar index as well. We're expecting this to climb up here, but once we then top out and the dollar starts breaking and moving toward all-time highs, 130, 140, et cetera, starts moving way up, then this pound is going to move way back down. Everybody with me? All right. So in closing on this euro pound, I do think we reached the targets. Well, the pound hadn't even reached yet. It's getting closer and closer. We got 136, 137, and we're kind of topping out about 135 at the moment, almost to 135, 134 and change. So we still got a little bit more to go. Where did that target come from? From that high to that low, we broke the 618786 zone. So the high probability, 75%, we're going to 136.27. 70 plus, we're going to this 138 target. And look how many from 121 all the way to 134. 1,300 pip move, and we still got more to come. So that's why you use Elliott Wave, you use the software. I mean, even the software, monthly's hooked and crossed back up. What does that mean? When our MPA, PAI, trend momentum cross, the hook and the cross is all you ever need. You get a hook and a cross and you have a high probability outcome. Now we got a monthly hook and a cross, and that means the weekly is going to cycle. That's why I was so adamant on the euro and the pound going up. Boom, got our big trigger. So this software, you can click in ready to trade mode. And if you want to trade, have it automated trading, it'll enter for you. When the software gets extreme oversold, it gets a trigger to go long. When the software gets extreme overbought, you get a trigger to go short. And you can just set it up in advance. So what we did with this pound trade is we set this days and days and days and days, even weeks in advance in ready to trade mode. And when we finally got oversold, and this baby hooked, we got a trigger and it entered automatically, and we're up 1,300 plus pips off of that move. That's what this does. And with our expertise, hook and cross, and our Fibonacci's, Elliott Wave, all the things we use, this is why it's high probability outcome. Now the question is, at what point do we continue this journey? Well, I'm expecting this weekly in the coming weeks. At some point, the weekly is going to turn over. These are oscillators. They go from one extreme to the other, right? One extreme to the other. And then we have this thing we call slingshot phenomenon that you typically can ride out in overbought territory for extended periods due to slingshot phenomenon. or you can ride out in oversold territory for extended period due to the slingshot phenomenon. And all that means is it's based on the movement of our time frames. So in our monthly hooked and crossed, the probability of the weekly cycles is extremely high. So weeks and weeks, even months ago, right? We talked about getting a weekly cycle up, and boom, 1,300 pips later. Isn't that awesome? Well, I'm going to draw the Picasso like I did then. I said the monthly was going to end up hooking and crossing. We'd get a weekly cycle up. Well, now that's transpired, I did it in advance, but while that's now transpired, what should happen next? Some of this action, some of this action, where the weekly is going to stay in overbought territory for extended periods while we keep slingshotting higher and higher, higher and higher, higher and higher. That's the plan. Well, in order for us to get up toward 160 up there, we're going to need this weekly to turn over and slingshot, turn over and slingshot, turn over and slingshot. Well, the uniqueness of the software, right, is in order for this monthly to continue to go up and this to turn and go back up, just like it did over here when we bottomed. We had a monthly, weekly, daily, everybody oversold, triggering higher. And I was like, man, you need to go long. Even if this thing just makes that retracement, you're talking thousands and thousands of pips. Before then, we're going to look to go back short and look for us to come back below the swing point low eventually. But for now, we're expecting way more upside. So my monthly cycled and now it's slingshotting. Well, this little move here, where the PAI, red, blue, green hooked, trend momentum, green above the red hook, this takes months. Typical cycle for a monthly like this to cycle up is 2 to 5 years. Well, guess where we are since the swing point low? We're in the 3-year period. So this took 2-ish plus years to get there. And the last few months, we slingshotted higher. And I called for this. I said, the month it's going to cycle up, it's going to turn over and slingshot. Well, it did that. And even as it made that little hook and cross back up, PAI hook, trend momentum cross, the weekly cycled. So this is the uniqueness. A monthly hook and cross, the weekly cycle. A weekly hook and across, the daily cycles. A daily hook and across, the 4-hour cycles. And it goes through all time frames. So as an options trader, if I'm trading options using this, then I know it takes 2 to 5 years for the monthly to cycle, takes about 2 to 5 months for a weekly to cycle, takes about 2 to 5 days for the day, 2 to 5 weeks for the daily to cycle, and about 2 to 5 days for a 4-hour to cycle. Isn't that interesting? Kind of, that's the formula. So when I'm options trading and I get a daily to PAI hook, and I know the 4 hour is going to cycle, then I know that it's going to take roughly about 2 to 5 weeks for that to cycle, if you're looking at a daily cycle up. So I know when I do my options, I can't do a weekly option if I'm expecting the daily to cycle up and it's going to take on average 2 to 5 weeks, then I need to have monthly options, not just weeklies, a week out. And if I'm expecting a weekly cycle to do, then it's like 2 to 5 months. So that's why it's important to have this in your back pocket and to know you can trade it automatically. It'll hit your stake profits. It does it all. And once you reach your profits, it'll close the trade for it, moves your stop loss into profit, making your initial trade a absolute winner, because even if it reverses against you, it'll take you out in profit after booking your profit. So there you have it. So in closing on the euro and the pound, I do think the dollar is still going to break down further. I'll come back to this picture. So we still got more upside. So I do think the dollar is going to fizzle and drift lower, and this pound's going to keep grinding higher. What happens after we get to these targets? Well, just like I said a few weeks back when we started pushing higher, I said we may need to come back to the Magic Fibo to bounce, and then it come right to it, bounced off of it. And I even put that in our classes. I said, we're probably going to see a retracement back to the Magic Fibo and bounce off of there before we get to these targets. And that's exactly what happened. Interesting, isn't it? All right. What about our dollar yen? I still think we got a little bit more to the downside. We talked about this trade. When we had this low to that high, we closed below this 146 level, which sets the tone. We have a 75% chance we're going to go down to 136. And of that 1,000 pip trade, we already made 700 of that because we came down to this 139 area, only 300 pips shy of this initial target. So I do think this isn't ready to go ripping and breaking out just yet. I think it's going to continue this stair step where we get lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, because we haven't quite reached this target. The other big trade I'm watching is this pound yen. We haven't closed below that magic number yet. But once we do, today, tomorrow, next week, next month, next year, doesn't matter the timing, when we finally get the closure below this 187 area, then it sets the tone for 177, 175, which again is a 1,000 pip trade to the downside. This also is looking interesting that we're rallying back into the Magic Fibo. We get rejected and we see a close below that 187, then it's game on. Just like the dollar yen made 700 pips in its move, this one would do the same. Highest probability, 75% we go to 177 if we close below that 187, 186 area. Right? Any questions on that? So that's the plan. I'm watching to trade this short once we get price to prove its intentions. All righty. Now, there's a lot of happenings in the markets, right? We get some up days, we get down days, but I wanted to take a few minutes to look at an article that I found, and I believe I have it open over here. You know, I've referenced before zero hedge, and you can look at this, and there's interesting articles that are published. Well, here's some graphs I pulled off from one of those articles last week, and it's about the pessimism. Everybody's pessimistic with the markets. So let's start off with consumer sentiment. This is an index looking at consumer sentiment and inflation expectations. And look at how low consumer sentiment is right now. This is your low back in COVID, coming out of COVID, pushing down into this low here. And people were very pessimistic and consumer sentiment was low as we were coming out of COVID. And it was just like, well, what now? We're going to get another infection. We're going to get this, another breakout. What's going on? But look, it's almost at those lows. Then you look at the 10-year inflation expectations. This is the University of Michigan, which I questioned some of this, but this is the highest since 1991. We're really expecting inflation to go highest, even though CPI and PPI are pushing lower and been on a downtrend. They're kind of saying, well, expectations for inflation to go real high. Talk about being pessimistic, higher than it was during COVID, during the 2022 area. And even during the Biden administration, when we had true inflation spiking, look at the sentiment right now. It's ridiculously higher, almost double that. So you're talking about pessimistic view of where the market is right now. And then look at these continuation. This is Goldman Sachs Business Optimism Tracker. Now look at the business optimism tracker. It's down here in the financial crisis, 2007-8 area when it plummeted. And then during COVID, and even 22, when we had that November 2022 pullback, we had pegged to the T before the Santa Claus rally ripped to all-time new highs. Look at where we are. We're down in that zone. And we just simply had a minor 17% pullback in the markets. This wasn't the big Elizabeth, I'm coming to join you, honey, but look how close we are. And when COVID lockdown, well, it's interesting how the Goldman Sachs Business Optimism Tracker looking at CEOs, and that's pretty bearish and negative, isn't it? Amazing. What happens when everybody is so pessimistic and negative and it's doom and gloom and the markets are going to crash? They typically do something else. So this is adding more fuel to the idea we're going to get that blow off top, in my humble opinion. Continue. They had tons of graphs in here. Now, this is how people feel about the US dollar. This is not directly the dollar index, it's a broad trade weighted dollar index. But look at, we're at the 2 standard deviation up here. And this is the average down in this zone. So look at how people think the dollar is just worthless, like it's going down. It's going down. And I'm saying it's getting a correction, but it's going to come back and strengthen dramatically. We're just talking about a wave one, wave two correction before we then go breaking out. But it's interesting how, and this was back in the 80s when we had that Black Monday and a lot were going on in the markets, doom and gloom. We hadn't seen anything like that in the markets prior, these big Black Monday, and that just freaked people out. But look how high, and we're already at above the 2 standard deviation. Talking about people thinking the dollar is just going to tank. And it has nothing to do with the trade wars. That's just an excuse. We talked about the technical picture, but this is just overkill and pessimism. Continue. I got several more to go. And then you look at U.S. inflation expectations. Now, this is expectations. And we saw that University of Michigan inflationary, what was it, come out, and it was up like 6.7%. Isn't that insane? That they anticipate. Now, this is the feelings. This is not actual numbers because the core PCE, it'll come out later this week. We'll see what happens. But CPI and PPI have been trending lower, but yet look how pessimistic the option. They're looking at this going, well, inflation's going to go to the moon. And this is going back above the financial crisis of 2007. Look how pessimistic they think in inflation rising. It's insane. I'm just curious at all this shift in sentiment and how the markets typically come back and rip in a vengeance to the opposite direction. Now we're looking at the S&P EPS estimates, earnings per share estimates. And we were just kind of hanging up here, and then all of a sudden, is it inflation doing this? Is it tariff talk? That EPS is falling off dramatically. Well, the forward thinking is EPS is doom and gloom. What happens with doom and gloom? The markets go ripping in your face till you get the short squeeze because everybody thinks, ooh, forward looking, the market's going to tank. Well, remember, I think we're going to get a blow off top first before we then get that bigger correction. That's been in the charts for years. It takes years for these things to set up, and it didn't matter who won president or whether we're doing trade talks or no trade talks, or war, no war. It's technically speaking, it happens no matter what the excuse. But looking at all of this forward-looking S&P 500 earnings per share estimates, pushing forward is negative, right? Look how much pessimism is out there. Next up, we have the market analysis is very pessimistic. We're down here. I mean, COVID, we're in the COVID zone. And then we got the financial crisis. But even in the 2022 big pullback we talked about, this was just simply a little correction off the high. And I still think we're going to get a blow off high. But here's more of the same. Market analysis is very pessimistic. See it? The analyst, I'm sorry, analyst. So market analysts are even pessimistic. So we got forward-thinking S&P estimates. We got the sentiment, inflationary going up. We got the sentiment of the markets being very negative. It's overkill. Next up, AAII. You can join this if you like, but they're bull bear index. It's been down in this negative area below when COVID, post-COVID, etc. In this zone, we're already there. And then we don't go all the way back to 2007 on the scale, but it's been hanging out for like 8 weeks down in here. And this is all the investors like you, me, and everybody else that take a survey. So you can join their service and take the survey, and kind of that's where this index comes from. Their members, how they feel about the markets, etc. All bearish. We're pushing one standard deviation, and look how far below it we are. Wow. And again, that was COVID time. And then even below, again, we don't have the 2007 market crash, but you get the point how exaggerated this is. So that's why I think it's really adding to our idea we're going to get a blow off top. His hedge fund pessimism. It's below even back in the COVID times, which we kind of cut off at that point. But I mean, this is, look at that. Even below the 22 pullback, the 23 pullback, which was more scary than this latest trade war. It's everybody overhyping this. It's all about the trade in China, this, that, and the other. It's ruining this country. Well, we need to fix this country. It's what we need to do. We can't continue to trade at such deficits. When we protect a lot of the countries out there, but yet we got trade deficits with them and we're protecting them, our military, etc. Why do we have to have a raw end of the deal? I just don't understand that, how they allowed this to happen and continuing to look for it. So I'm glad we're starting to see this trade war and renegotiation. But it took many decades for us to get into this since NAFTA. So you can't expect trade deals to come in the first 100 days, first 200 days, and everything's, blooming. It's going to take time for this to build manufacturing, reestablish our dominance in all of these manufacturing areas, which we had been in the past. It didn't just get destroyed overnight, and it's not going to get rebuilt overnight. But again, look at the pessimism. Hedge funds, it's doom and gloom. Well, hedge funds do this on purpose. Mr. Tucson, if the hedge funds tell you it's all doom and gloom, and then they show a 1%, 2%, 5% gain for the year, then they're like over-delivering, right? Under-promise and over-deliver. Well, this pessimism is pushing the limits. And last but not least, even the presidential approving ratings. And you hear that, President Trump's at the lowest of any president, blah, 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 blah. Well, I don't think he's going to be a very positive president to most people because he's doing the tough decisions. Renegotiating trades since for decades that we've been getting the raw end of the deal is not going to be popular with a lot of CEOs and hedge funds, because they need that extra gravy and cutting back on government spending into the tune of targeted $2 trillion. Well, that's money the markets use as crack. They need that. We need more money, more money. And it's just amazing how they're looking at this. So I don't think he cares about his ratings as much as he did the first time because he thought about running for the second time. But even Biden, I mean, it was up here, and even with the inflation and all, his ratings were high. Then it plummeted toward the end when we had all the migrants and immigrants coming in, all the things that transpired. That's not good for this country. I don't care who is in office. We can't allow a bunch of criminals to come in this country and abuse our citizens. Saying I digress, but all of these are very pessimistic. So when we put all that together and we go to the markets, what are we looking at? Well, we're looking at a very dangerous time. This is what we had talked about, right, Mr. Tucson? We knew we were due for a correction. We talked about either coming to the daily Magic Fibo, the 3-day, or the weekly. Well, we got the weekly and we bounced off the weekly. So we got what we needed. Now we're getting the retracement. But remember weeks ago when we talked about this, I said if we start to see that we get this correction after that down move, we get a 3-wave correction that goes back up to our 618 Magic Fibo level, and we get rejected out of there, this is going to be big. This is going to set the tone in the coming weeks and months. Emil, once we rally up here, do we get a three-wave correction? Maybe we get the big 618 retracement zone to then go breaking out, get that blow off top. With all this pessimism and everything going one way, the sentiment is just solidly one way. That's typically when the markets do something different. So that kind of adds some oomph, a little Louisiana land yap, Mr. Tucson, for us to go and do a blow off top. But this could be critical. We get a three-wave correction and we go breaking out, great. But what if we get a five-wave down and we still come into the zone and then we get a three-wave correction up? We see that. This is, you better be careful, because this is market crash warning, 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 warning. We're crashing. So what is that? Let me show you again. Based on this rally, I said last week we got a 618 bounce and we were going to go up toward that 56, 5700 area. Test up here by the Magic Fibo, test our 1618 retracement zone. And did we peg that beautifully so far? Not too shabby, right? High probability we got that 618 retracement, and then we're going to bounce and go up to the daily Magic Fibo. We're almost there. We're into the danger zone. That is from the prior high to low. We're in that 0.5 to 786 retracement area, and the Magic Fibo is right there. So this is beginning of the danger zone, but I think we're still going to go up and test this up here. That's what I think is going to transpire. After that, we're probably going to get some sort of correction. That is typical. Do we get a three-wave correction from the low to the high? Get some sort of 618 retracement, a little three-waver in here. Get a 618 retracement to go breaking out? Or do we end up pushing this even further and it ends up being, a five-wave down? That would not be good. But even if that is the case, and we make a new low, for example, it's about, are we going to correct in three waves? So this is why this looks like a three wave so far. This is why this is danger zone. But remember, we had that conversation, James, that whether this is going to be a five wave up and we go breaking out, or this is going to be a three wave correction and we're going to go, Elizabeth, I'm coming to join you, honey, early, and we don't get the blow off top, that this is a high probability we're still going to come up to this zone either way. That's why we talked about buying the dip here, and then we got a 618 retracement, which we kind of pegged and expected to then be bullish for us to go back to revisit the Magic Fibo. Now this thing could go ripping up here, come back, retest, and that would be part of the five waves. And yeah, we get up there, great. What would be the timing? I'm still thinking we're going to get a blow off top pushing out into probably fall to maybe late fall. That's the plan. So of the two options, is Elizabeth, I'm coming to join you, honey, going to be sooner or later? I think we're going to go blow off top first before then we get the bigger correction. That's just technically what's on this chart. No matter how I slice it, and we talked about it in reference of a bubble pattern going to a higher time frame, that psychology of a market cycle always plays out no matter what. And you start looking at the last multiple years since this COVID low, and even after our corrections, you even go back further. But this last little section here, this thing looks vertical, right? Look at that. That looks clearly vertical. We got a little correction and then boom, went vertical again. So even since this 2023 low, 22 low here, that looks like a bubble pattern and we're likely to come further down. So this right here tells me what I've been saying. Before we break 7,000, we're going to break 4. That's what this, just off of this low to that high bubble pattern, should bring us down in its consolidation zone somewhere below 4,000. Well, the only thing below 4,000 happens to be, as far as the Magic Fibo, is the monthly, right? So this is why, here's the Magic Fibo down here. So this is why I've been telling you, before we go breaking 7, we're going to break 4. The only question is, are we going to get that blow off top first? Or are we going to end up seeing this do a little 3-wave correction? We get a push lower, 3-wave correction, then its crash is inevitable. So rinse and repeat. I'll come back to ES based on this. And let's go back to our daily. So what are we looking for? We're looking for, without a doubt, my humble opinion, James, we're going to get this 3-wave bounce to make its move up toward this Magic Fibo area. So I've been saying it. It's been in our charts for some time. Not even reiterated. Markets expected to grind up to day 1 Magic Fibo. Later in the week, still last class last week, we're still expected to grind up to the daily Magic Fibo. We expected we retrace down to the 3-day. We actually went a little bit further. Then we got the bounce. We talked about that. Then we said we're likely going to go up here. We're headed right there. So part of this was that equation that in our findings, well, that's exactly what we think is going to transpire. So what to do? If you're still into this trade making profit, you need to be in a position of authority, because I do think we're going to get a correction. So with all this pessimistic behavior, it might be fitting for us to get some sort of move down. So the markets continue with pessimism. It's going to doom and gloom. The markets are going to crash. Look out. And then this baby goes ripping up to 6,600. Right? So I'm watching this closely. Is this a 3-wave correction? And we're starting a new 5-wave down? If that's the case, do we get a 3-wave correction after that? Then this is look out below, crash inevitable. Crash is inevitable. That's like seeing the tornado at this point and it's bearing down right at your house. That's what that means. Now, this could, like I said, be part of this move, and we go ripping up here. We get a little correction back down, not going into that area, and then we go popping and we break above the Magic Fibo. When we start doing that, then the tone is set for us to go on to all-time highs and to shoot for the 63, 65, like 6,600. I still think before we break 7, we're going to break 4. Period. End of story. So please be careful with this. This is firming up right now to a 3-wave move, but that was our whole conversation, right? That even though this turns out to be more bearish than bullish, and we get a 3-wave correction and we get rejected, and it's Elizabeth, I'm coming to join you, honey, we're still going to get a substantial retracement back from all-time highs to that recent low. We're going to get a substantial several hundreds of pip retracement on cue, right to it. So I'm still leaning more this route, that when we get up to this danger zone, we're going to do a 3-wave correction to set up the blow off top. And not the 7,000, that was a little aggressive, but the blow off top will come into this 64, 65, maybe 66 area. So this is what I'm looking for as we get up here, James. Could we go up here, push 59 even? Yeah. Are we pushing at 618, 786 zone, and we get a little 3-wave correction, and then we do the blow off top somewhere into the mid 6s? That's the plan. I believe this is the route we're going, more than we're going to do a 5-wave down with that 3-wave correction. So this is going to be critical. Do we go 5 waves down Three-wave correction, that is doom and gloom, clearly. Or do we do a three-wave correction setting up the blow-off top? Amen? This is where the charts will scream obvious. Right now, we don't know. I do think we're going to get the retracement coming once we pop into this zone. So I still think we're going to get to that 56, maybe 57, 58, 59. I know it's a big zone. So between 56 and 59, that's right where my 618, 786 zone is. So I'm expecting us to rally into that. Hint, hint, hint. I've been saying it for days now. After this reversal and 618 retracement we pegged, that's where we're going. The question is, after that, you need to take profits off in this area because we're definitely going to get some sort of correction. Is it three waves to go blowing out? Or is it five waves followed by a three wave? And if we see that, that's when you bail, and that goes back to this one. Move that. That goes back to this 1878 chart in 2026. Good years right there, prices, time to sell stocks and all values of all kinds. That we set that up five wave down, three wave correction, then that's inevitably just screaming crash is coming. And that's what this chart is telling us. We expect that maybe it's into 2026 or late fall 2025. We're expecting that, Elizabeth, I'm coming to join you, honey. So if we get that, Mr. Tucson and others, it'd be a good idea to liquidate anything you're long market and then set up some short market opportunities or move your money somewhere else and fixed income while if you don't want to play the downside. But we know there's many ways to play the downside with ETFs, options by buying puts, etc. Many ways to play it. So in closing, I'm very bullish for us to go up further and test the daily Magic Fibo. Currently, it's resting somewhere around 57. So that's not a whole lot more for us to go another 125 points. Right? So far, so good. And then look for some sort of correction. Do we get the three wave to set up the blow off top? Do we get a five wave to set up the three wave correction? And if that happens, ouch, that is doom and gloom. Amen? But with everybody being pessimistic, outlook this, the sentiment that, the fear and greed, blah, 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 that's typical when you get one of these blow off tops. When everybody's expecting the market to do one thing, the market does the other thing. And then when everybody gets optimistic and they're going, yeah, we're at all-time highs, life is good, we're going to the moon, Alice, just keep buying, we're going to be selling. Amen? So either we're going to be selling from up here in all-time high category, or we're going to wait for that 5-3 correction. Then we'll set the tone for some major downside. And the downside is what? Below 4,000, targeting that 35 area for my monthly Magic Fibo. Amen? Substantial. So we get to 6,600. We're still expecting to come down here. Yes. This is the top, and we end up with that correction, and we fizzle, and then we get the doom and gloom. Five wave down, three corrections, still coming down here at least. And if we don't hold that, then we can start pushing way back to where we had this correction over here, and we could come back into the 2,500 area. Ouch. All righty. What about the NASDAQ? NASDAQ's in the same boat. We got a beautiful 618 bounce going up toward the Magic Fibo. And why is this a zone up here? Well, Mr. Tucson, if you use a 3.2 on this recent low to the high, to the higher low, For us to get equality would be up here about 20,006, just above the Magic Fibo. And if that ends up being a three-wave move, and we get rejected in this zone, we see a five-wave coming down and a three-wave correction. Houston, we got a problem. If we see this go up into here and we end up with a three-wave correction, then it's blow off top. Amen? So I don't think we're just going to go up into this big danger zone and slice right through it. I don't see that happening. I do see us going up here. I'm leaning more bullish than bearish, getting that blow off top, which will push us into 24, 25, 26,000 range. But this rally was a high probability. That's why I kept saying it. Even if this turned out to be the more bearish three-wave count, and this is the all-time high, and we're ready to go, Elizabeth, I'm coming to join you, honey, then we're still going to get a big rally into that 618 zone, which typically launches somewhere near my Magic Fibo level. Interesting how that plays out. Any questions? So keep buying the dips till we go up a little bit further. We're only talking about 500 plus ish points. Maybe we push it 1,000 more points ish in this area toward that 21.2, 20,002, 21.2 zone. That's my 618786. And then I think we're going to get a correction. My bias, so let me move this way, just like ES. My bias, once we get up into the zone, we're going to get a three waver to then go blow off top, as opposed to a five waver and then the three wave correction. But either way, when we sound the alarm, Mr. Tucson, if that happens and we get that three wave correction, man, get your house in order. It is going to be ugly, not nice. But I'm leaning more toward the three wave with the blow off top. So again, my humble opinion, this is what will transpire before then we start with a five wave down, three wave correction, market crash after we get up here. So price will prove it. Do we get the three wave and a reversal, or do we get the five wave and a three wave correction to the upside? Uh-oh, Houston, we got a problem. Amen? So with this one, it could possibly be 1, 2, 3, 4, 5. And is this the 1, 2, 3 wave correction setting up the big one? Or do we break out? So it's all depending on once we get to this target zone, hint, hint, hint. I still think we're going higher. So keep buying the dips on this and then look for a three wave correction, which I think is going to transpire. But what's the magical levels we look for then? Well, you would use your 2-point tool and you go from your swing point low up here to where we think we're headed. Let's just kind of split the difference between 20,002 and 21 to about 20,005-ish, 6-ish, somewhere in that zone. So I'll move that a little bit higher, go up here to about 20,006. So even if we do this, this rallies up into there, and we get to this point, we get a three wave correction. And as long as we hold this 18,000-ish range between 18 and 17.5 area, as long as we hold that, that still sets up a blow off top. So we can still get a nice hearty pullback off of the original low to that high up here. 618 retracement, as long as we hold that zone, we're good for more upside. But if this thing turns into a five wave down and then that three wave correction, Houston, we have a major problem. Blow off top is off. And Elizabeth, I'm coming to join you, honey. Crash is on. Amen? So QQQ, it doesn't matter how you trade it, same thing. Talked about this. We're going up here to this 480 range. So we still have another several points to go. I don't think we're going to go breaking above that 511. So somewhere between the Magic Fibo and this 511 area, I'm looking for a retracement. Is it going to be the 3-wave or is it going to be the 5-wave with the 3-wave correction? You get the point. We do this. Look out. We get a 3-wave correction. We hold the same type of thing. Use a 2-point tool from the low. Let me pull this up just a touch. From the low to the high, which we believe is going to be at least around that 488. Between that and 511, say we come up somewhere in between. Then we'll look for this 439, 420 area to hold. Everybody good? Somewhere in that zone. So if the retracement ends up being 3 waves and we hold in that department, then all-time highs, here we come. But if we end up with a 5-wave and then we get a 3-wave correction, Houston, crash is inevitable. Crash is inevitable. Crash is inevitable. So I'm here to guide you. Join us and we'll protect you as best we can as we see the markets play out. But in the short term, all this pessimism, I think we're going to get the push. And if it continues, when we get this correction, it could be scary, right? Uh-oh, good Lord, that's just a dead cat bounce, and this is the trade war. And we're just getting started. We're destroying the country by trade war. And we're doom and gloom. That's typically when this thing goes ripping. So be careful. Take your profits when we get up here. So any dips short term in the next days, maybe a week or so, 2, whatever, I think we're going up here. When we get there, then we need to look for that correction. So I'll be taking profits off the table, look for a correction. And if we get the perfect 3-wave, maybe 618 retracement, 3-wave correction, like we talked about right there, that was a beautiful setup. And look at the move. We went from down here by 428. You're sitting at 472 and counting and looking for a little bit more upside. Any questions on all that? The only one that is different is on a different pattern, different animal, is our Russell. As we expect ES to go all-time highs. We expect NASDAQ to go blow off top all-time highs. We expect the Dow even to do blow off top all-time highs one more time. This Russell is only going to make a retracement into this big resistance zone. So I do think there's more upside, but then it sets up a beautiful down move. So if we can get ES at all-time highs, NASDAQ at all-time highs, Dow at all-time highs, Nikkei pushing in all of the markets, woohoo! And this baby's up in this resistance area, look out. Big time down, we're talking 114, 112, or 1400, 1200 on RTY. And IWM, we're talking down here in the 140s to 120 area. And what does that mean, Mr. Tucson? Should we rally to 216, 228, come up here by the Magic Fibo, when everybody else is at those all-time high blow-off top, that is a beautiful area to go short, maybe a put spread down here, because the likelihood we're going to go below 1600, pushing that 140 to 120 area, is extremely high probability. Amen? And that's what sets up from the high to the lower high. That's setting up these bigger zones down here around 130, 120, kind of 140 to 120 area. And that would be a great shorting opportunity. Amen? All righty then. Dow, just real briefly. Again, when I say market's expected to go up to the daily Magic Fibos, that's where I'm expecting this to go. Then again, same rule. Are we getting this 3-wave move to set up the doom and gloom? Are we getting the three-wave move up to set up a little correction for the continuation to blow off tops? I'm leaning this way, blow off top scenario. Then once the blow off top hits, then it's five-wave down, three-wave correction, another big run. And we spent time with this last, I think in Thursday's class. So if you haven't looked at that, you need to. That we went back into the big different crisis during the dot-com bubble burst. We went back to the 2007 financial crisis, and we looked how you get these 618 retracements and then extensions and then another rally, 618 extension retracement. So that's part of what we look for, a three-wave correction. You can see if you go in the smaller time, it was a little five-wave down, three-wave correction, 618 rejection, next wave down. So it's pretty interesting how it always plays out that way. Amen. Whether any of these markets, you look for the five in the direction of the trend, you get five waves up, three correction. So if we're topping and we're going, Elizabeth, I'm coming to join you, honey, we're going to start a new downtrend. So we'd be looking for a five-wave down, three-wave correction, five down, like we saw over here. Five-wave down, three correction, five down, three correction, five, etc. Amen? But shorter term, still think there's more upside. You can look at where the Magic Fibo is sitting up here around that 41.7, 41.8 area. So I think we're coming to test this move. Still have some more points to go up, another 1,000 plus ish, 1,500. Maybe we push the limit toward that 43, but somewhere in this danger zone, Mr. Tucson, I think we're going to get either a three-wave correction to set off the blow off top or a five-wave correction followed by three-wave correction back up. And if that happens, then it's Elizabeth doom and gloom. Amen. So again, I will be here to lead you to see, what are we seeing? Are we getting the blow off top? I say at this juncture, Mr. Tucson, others, James, yes. Check. We're going to get the blow off top. In the interim, before we get to the blow off top, I want to see that come up into this resistance area, three-wave correction, likely a 618 retracement area. So what does that look like on the Dow? You use a 2.2 from that low to the high. We're looking at going somewhere between that 41 and 43. So let's kind of split the difference, 42-ish. And from there, during that three-wave correction, we want to see this 38.9, 37-ish level, somewhere in there hold. As long as that holds, then we can look for blow off top. But if this turns out to be the five-wave style and then a three-wave correction, Houston, we got a problem. Boom. Down goes Frazier. Down goes Frazier. Down goes Frazier. So what is this time frame? I think this could correct us once we get up in here and we start doing this correction. This could push us into summer, and then we get that last summer into fall, September, October-ish, or even toward the end of the year, get the blow off top. So I've been saying I think we're going to rally into a blow off top, all-time high blow off top as we get into the fall. And as far as the most we're likely to go up into here, get that three-wave correction going in the summer, as it's going to be May this week. So we're talking May, June, maybe the next couple of months or so, we do a little three-wave, and then the following several months, we go ripping into all-time high category. Amen? But this one, again, we're not going to go breaking all-time highs. This one will get up into that 216 to 230 area, And Mr. Tucson and others, when I see IWM is perched at 220 or higher, I'm setting up for a big 140, 120 target down here, and I'd give it plenty of time. If you're doing options on something like that, a put spread, go out as far as you can go. Give it plenty of time. Amen? Otherwise, we can buy some inverse ETFs or some other things you might like, but you get the point. Look up for a massive correction coming down, and it's going to be a spectacular move lower. That's what's in the chart. This is not blow off top. This is rejection zone, new lows down to 140, 120 area. And again, Nikkei, I want to see it. I mean, this could be doom and gloom. If we can't go breaking out to do the blow off top, we really need to get above 40,000. First, we got to do is get back into this 37 to 40,000 range, which we chopped for many months till we broke down. We need to get back in here, then blow off top. So I would not be surprised to see the same type of price action that we rally into the zone. We get a three-wave correction to then set up the blow off top. But that would be ideal, global liquidity. I look at this as the proxy for global liquidity. I'm not looking to trade this. I'm just using it as global liquidity. And with that, we get that blow off top with IWM. We get the blow off top with the Nikkei, with ES, with NASDAQ, with our Dow Jones, and then our IWM, Russell goes into that resistance zone to get rejected. That's setting up the perfect picture. Crypto goes into the fall and goes blowing up to our 160, 175 target. All is up here. ES is at all-time highs. NASDAQ is at all-time highs. Nikkei's at its blow-off top, et cetera, et cetera. Then it sets the tone for the big winner. Amen? But it's about the correction coming. Is it 3? Is it 5? If it's 5, do we get a three-wave correction and then it's doom and gloom? Or do we get the three-wave and we go breaking out? I'm still leaning toward the blow-off top up here more than this down here. But once that's complete up here, look out. Elizabeth, I'm coming to join you, honey. Amen? All righty. What about black gold Texas tea? Well, we're getting close to our zone. And do we go up a little bit higher? I was calling for 66 to 68 be tested. We didn't quite get there yet, but I'm not over this yet because from this low to this current swing point high, right there, from the low to the high, as long as we hold this 618, 786 zone, this could be what we're doing. We're going up in here, we retrace here to get the breakout, to then get a new low, or do we break out to then go way up and we go soaring? Which one's it going to be? Based on this price action, I think we need one more flush down to the low 50s before we set up a reversal. So, as I was mentioning, you should be in a position of authority that we were probably going to rally up. Maybe we get a little three-wave in the here, give us our last little five-wave push lower to the lower 50s, and then we look for a reversal. Because what would that set up if that happens? My monthly oversold, weekly oversold, daily oversold on the software. I don't do anything without the software, as you well know. I verify all my market analysis with how the software is setting up. And you can see why we expected this initial bounce, because my weekly still engaging, but it's oversold. My monthly is. My weekly's oversold, starting to turn up. But when a weekly turns up against a monthly that's still down, we're probably going to get that push. That's what I'm thinking. And we said we could buy this because when the daily reversed, we were going to get a move up. But that's why I'm telling you, be careful that I thought we'd get to 66 and we got to 65 and change. Let me go back over here. I said we're going to go to 66 and we got to 65 on the CL1, 62, but on US oil went up to 65 and change where we were. Let's see. Anyway, so at 65 right here, our WTI, where I was getting that price, 65 right there. So a little shy. Is this over? No, not necessarily. As long as we hold that zone, we're good to go up a little bit further. But even as we get up further, I still think we need one more flush lower before we go breaking out. Amen? Any questions on that? So from the Fibos here, whether you're looking at CL or this one, if this zone holds, we could probably get that rip. But if we don't hold this 58, 57 area, then it sets up lower 50s, probably pushing down toward 50. Lower 50s is the plan. So everybody make note, if this turnover fizzles and we don't hold that 57, 58 zone, 58, 57, then look for us to go down to the low 50s. Amen? Then we could talk about when my weekly turns and hooks back up, my daily turns and hooks back up, we can scalp it back up again. And we're looking for a pretty substantial run at that point. Gold, be extremely careful with gold. I think in the coming weeks, we're going to come down here. I don't think we're just going to keep blowing doors to the upside, especially if we get the blow off tops in the markets. I think gold will continue its retracement. Maybe this retraces all the way down on the next several months into late, early fall, etc. Could take time. And if we don't hold that, we could go a little bit deeper. But the deeper we go, this is great opportunities to buy long term. Because what happens when our markets start getting very unstable and we go, Elizabeth, I'm coming to join you, honey, and we get those big, massive pullbacks we know is coming, whether we get a blow off top first, it's still coming. That gold is likely to go ripping into the stratosphere, starting to push for that 5,000 target, but we need a correction. Even if we get near the daily magic Fibo, you're talking about a double coming roughly toward that 5,000 target up here. Amen? So be careful. I do think in the coming weeks, we're basically going to get a three-wave correction down. It could surpass the daily magic Fibo to go to a 3-day or weekly. I don't think we're going to get way down here to our monthly, etc. But hey, if for whatever reason you see gold below 2,000, poof, back the truck up. Because now we're talking more than a double coming up to that 5,000 target. So I'm extremely bullish gold, but this is a parabolic move as of late. Look at it. Parabolic move as of late. So this would be a good area to come back and retest this plateau zone before going higher. We don't hold that, then we're back in this plateau area for the next one, this plateau area for the next one, on and on. We could go deeper. The deeper we go, the more I salivate to buy gold, much longer term. Amen? So be careful with this. I do think, as I warned you, as this baby went vertical, that we were due for some sort of big retracement, at least back toward the daily magic Fibo. Amen? Silver. I'm still extremely bullish silver, but I don't think silver is going to go breaking out when gold gives us that bigger correction. So, ladies and gentlemen, we have an opportunity for silver to come down into 25 or lower, which anywhere between 25 and lower is back to truck up zone, where we get this correction before we go ripping longer term. And what I love about SLV is you go to the weekly time frame, you pull in our all-time high to a recent low up into COVID. So from all-time high to the COVID low, we've already surpassed our 618, pushed very close toward our 786, but the rule has already been established. We got a daily candle body, weekly candle body, monthly candle body. So all we need on the daily chart for us to go up here, well, this is a weekly, we got a candle body. Even on a monthly, we got candle bodies above that 28. So that says 75% chance we're going to 60, 70 plus, we're going to 72. This, my friends, is a done deal. Absolute, in my humble opinion, done deal. No ifs, no buts, no ands, no exception. When is it? Is it today? Is it tomorrow? No. Next week? No. Next month? No. Could it be the end of the year? Could it be end of next year? Timing is the toughest part, but we're going to get here. So any pullback below 25 is an absolute steal to buy. It's like buying Bitcoin below 20,000, right? Absolute steal. And yes, whether we get down here to 25 or lower, which I still think is going to come to pass based on gold retracing all the way back to that 2800 zone, this should push us back at 25 and lower. Set an alert. You can even set with your broker, hey, I want to buy 100 shares when we're at $25 or whatever. 10 shares, 1 share, whatever. Buy shares, hold them, and if we buy some at 25, it goes to 24, buy some more. It goes to 23, buy some more. And I know it's showing 12, 8, not coming down that low. But we get 25 and lower, consider that a steal and look at a double, triple type of move the further we get below 25. That is extremely high probability. Amen? All right. What else? Well, in NinjaTrader, the software is available in NinjaTrader. We're looking at Tesla and TSLL. I do think that Tesla is going to go breaking out, regardless of what the markets do, because they got their cyber cab, they got their robo taxis. Robo taxis are different, where they're actually vehicles, but cyber taxis, if you will, is software that all self-driving models they can roll it out to. So between the cyber cabs, robo taxis, and cyber cabs, I think what they officially call it, that should push this thing to the stratosphere. And this is a beautiful bounce off of that weekly Magic Fibo. And that sets the tone for these extensions up here in the 5 to 600 range, maybe even pushing 700. So I'm extremely bullish on Tesla, especially after the big burning Tesla vehicles and the liberals eating their own, which most liberals own Teslas, and they're amazing. They were blowing up, scratching in their own people's cars. It's insane. People have lost their minds, literally. So this is still a high probability. Ian, I think this is a great opportunity for us to get Tesla to go way up. And if you don't have the big bucks where you can buy a lot of shares at several $100s a share, then I'm in to win my TSLL. When I got my last little dip in the 6, added to my position and looking for more, much more to the upside. So, yes, I think we're still going to get that little correction in the markets. Tesla, et cetera, should give us a correction. If it's a three-way where we get the blow-off tops, and if we start moving into summer when the robo-taxi and the robo cyber cabs and robo taxis is rolled out, that should get this baby to go ripping. That's my plan anyway. Amen. And what am I shooting for? Somewhere in the 40s to $50 range. Not a bad return on investment. And the software is beautifully setting up. Weekly's reversing, monthly's oversold, backing up the weekly. I don't have much data on this in this platform. I guess I'll have to add some more data to it. But you can see there's not already oversold territory, and the weekly's reversing. So in the coming months, I can draw this for you, Mr. Tucson. I think in the coming months, this monthly is going to start cycling up. This is going to turn and start cycling up. My weekly is going to go from oversold to overbought. May even start slingshotting higher as we start ripping to some new highs and go up to these extensions. Somewhere around 46.50. Maybe we push the boundary into the 60s. We shall see. Amen. And also included with the software is the MPA down here. When you look at drawing tools, we got the MPA Fibonacci retracements, MPA Fibonacci extensions, and that's what this is. Just like we run every day on our charting platform, I always use my extension retracement. While I created that for ease of use into the NinjaTrader 8 platform, which is available for your convenience. Amen. But that is just screaming, even on Tesla. You can see Tesla, we definitely have, actually right here, we have that, a lot more data there. Go to the monthly, and we can see same thing. The monthly is oversold territory, and we're looking for the monthly to do what? Turn over, slingshot, turn over, back up. This is going to go up. That's going to go up. Likely even see some more slingshotting as we get into summer, into fall. I would be surprised if we're not in the 500 plus, maybe 6, could even be pushing 7. I like it. And my weekly is right where we need it to be. And remember, how long does it take a weekly to cycle? 2 to 5 months. And we're in May, so 2 to 5 months. June, July, August, September, October. So that would be a perfect cycle into the fall, in which we think we're going to be at the mid 500s to 600 and above. And I've been talking about this for quite some time here on our software, our class notifications. We talked about it going right there. Tesla 5600, TSL 45 to 60 range. And we got as low as $6, sitting at 10, not too shabby. Amen. And then you go back in October of last year, right there, expect Tesla to hit 500, expect a TSL trade, consider it. And what did that do back then in October? TSLL did what? Did a thing of beauty. Let me stretch this out and bring that back over here. But back in October, right there, as we were saying, consider Tesla going to 500, consider this trade, and it went from basically $9 to 41 and change. Not too shabby. So this is why we expect ditto going up to those extensions. Amen? All righty. And the other one, actually, I got a couple of trades that are setting up with our little formula that you might want to consider. One is CIBR, cybersecurity. This looks like it's been in a nice uptrend. I'm going to go to the daily, and we're setting up as we speak from the high to the low. We get a close above there today, Mr. Tucson. Then there's a 75%. We get a candle body, not a wick, but the body. Then there's a 75% chance we're going to 74, 70 plus plus, we're going to 76. Nice move setting up. CIBR, First Trust, Cybersecurity ETF. On average, just looking at this over the years, it takes about 45 trading days. Not 45 calendar days, 45 trading days on average. Could be shorter, could be longer. But then when you start to throw in your Bollinger Bands with the differentials, you can add a one standard deviation that would add 35 additional days. That pushes this up into timing wise. You put the additional days, 68% of the time, you will not run out of time. Add another standard deviation, another 35 days, that puts us at 95%. A third deviation, another 35 days, that's a total of 145 calendar days. That puts it at 99%. You will not run out of time. So those asking about options, how long do I do? That's why I use the hook and the cross. I know how many weeks or months it takes for a cycle, but based on this targets, we know the probabilities of getting here. How long does it take? 45 trading days on average. So if I add in my standard deviations, 35 once, that brings it up to about 70%. You will not run out of time. Not 70% you're going to reach this target, 70% you're not going to run out of time. And then another 35 days, another standard deviation, that pushes us at 95%. So if I do the 45 plus 35 plus 35, now we're talking 95% we will not run out of time to reach these targets. And if you really want to go for it, you throw the third deviation in there. Now it's at 99%. You're going to get there, not run out of time 99% of the time. And you still got these high probability 75, 70 plus percent you get into these targets. Amen? So that kind of gives. So if you're buying options and you always running out of time, consider factor of 45 trading days on average to get here. Throw in a standard deviation. Now we're talking 70 plus percent. Not percent you're going to reach this target, but 70% of the time you're going to have enough time on your options, adding the 45 plus the 35. You add another 35 days to that, then we're pushing it at 95%. A third 35, which is 148 days total, calendar, that's trading days. So right now, if we did that to give me basically a 99% chance I'm going to get to this target, I would have to buy an option out to about November to get here. Now, it could happen much, much sooner. I'm not trying to tell you it's going to take to November to get up here, but just looking like Bollinger Band standard deviations and looking at this formula I've been looking at for many years, it is 75% we're going to get to 74, 70, 70 plus plus we're going to get to 76. And then timing wise, average 45 trading days. But if I add those deviations to it, add 35, now we're pushing to 70%, add another 35, we're pushing it to 95%, add another 35, now we're at 99 plus percent that I do not run out of time. So it's two different scenarios. How much time and probability of getting to this target? Average 45 trading days. So There you have it. That's setting up beautifully. There's your targets. Take a screenshot if you want to look at that later. The other one is FTGC. This one is also setting up high to low. We're right at it. So based on that high to low, close above 25, sets the tone 26.40, 26.80. So far, so good. This one isn't quite ready yet. The first one, if we close today above, then it's ready. This one has to close above with a candle body. Not quite ready yet, but it's getting close. And the other one is FTNT. Fortinet, this one is setting up. How long have we had no sound? I'll have to double check that in the archives. Sorry, I got so excited on these that what did you hear last? Did you hear my trades I went through? Did you hear my targets and analysis on this? CBIBR? You heard that one? This one's setting up. And just in case I was on mute the whole time, then I'll tell you, yes. Okay, so this is going up to this target. And on average, it takes 45 trading days, not 45 days, but trading days. And then you start to throw in your standard deviations. And does it go shorter? This thing could go ripping up here in a few days. This thing could go take 45 trading days to get here. It could take twice that long to get up here. But when you start looking at 75% chance we're going to get to 74, 70 plus, we're going to get to 76. What about options? Well, if the average is 45 days, I wouldn't do any options less than 45 trading days, right? But if you add in the standard deviation of plus 35 days, then that pushes us to get here 70% on time. You would have, and then if you put another 35 days for another standard deviation, that puts us at 95%. You would not run out of time. So you take 100 trades that would go and reach this target 95% of the time. If you do the 45 plus 35 plus 35, that's additional, what, 70 days to the 45? Then that pushes us out into 95% chance I'm going to get to this target without running out of time. And it's still a 75% chance I get here, 70 plus percent chance I get there. So for those trading options, you can't do anything less than 45 days, even though this thing could go ripping up here in the next 5 days, possibly. But the average is 45 trading days. So I wouldn't do anything less than that. So if I was to take all 3 standard deviations, pushing this up to a 99% plus chance that I would not run out of time before we got up here on an option, then you're pushing us 148 trading days, which pushes it out into, I think it's November. So I can use this little tool. And from this scenario, you push out 100 and, let me get that. And I'm going to have to move it further. So let me compress this and move that. So it pushes out like 148 trading days. 148 bars. So that'd put us out in November. That's it. So what does that say? If I take this trade and I push an option out to November, I have a 99 plus percent chance I'm going to have plenty of time for us to get there and I won't run out of time on my option. And I have a 75% chance I'm going to get to this target, a 70 plus percent chance I'm going to get to that target. Amen? That's just using standard deviation. And we know about standard deviations because we use the Bollinger Bands that are part of our MPA software, et cetera, et cetera. All right. And then the other one was, I'll just review these. FTGC was setting up. We need a close above this 25 to set the tone for these targets. And then FTNT, which is Fortnite, and it is right at setting up today. Do we get the candle body close today? And here's your targets. If it does, we get this candle body to close above. Then we have a 75% chance we go into 119.60, 70 plus we go into 123. Again, average of all of these types of trades is 45 trading days, 45 bars. And you throw in those deviations, standard deviations, 3 times, bringing it to 99%. You're targeting 148 bars, which puts us into November. Interesting. And I can't tell you how many times early in my career that I did some options trading and it went to where I thought it was going to go, but I missed it in the timing. Timing is the toughest. But I thought that was interesting when you start doing mathematics and standard deviations and time and tracking all this information that would get you up into the zone and timing wise. All right. I think we've covered that. Last but not least was Coinbase and its counterpart, the coin. I do think as Bitcoin goes ripping, we're talking going into the 400 plus range. We're still waiting for the recent close above 270, get above the Magic Fibo, start getting above here. Once we do, we start looking for 380, 400, maybe 480, 500 zone. So I do think as Bitcoin goes ripping to 160, 175 area, I think we're going to be up in that probably 400 to 500 range on Coinbase. So for our leverage friends here, the 2X Coinbase ETF, CONL, I think we're pushing into the 80s. So once Bitcoin goes ripping, I think this CONL is going to go ripping, make some new highs, and start targeting 80, 90, 100 level. Very likely outcome. We're going to see this as Bitcoin goes ripping up to that 150 to 175 zone. Amen. So these are some of the ones I'm definitely looking at and expecting the big payout on these. And last but not least is Bitcoin. Right now we're in danger zone. We're in my box of resistance. We broke above the Magic Fibo. That's good. We're testing the 618 from the high to the low. I'll zoom that in for you. Stretch that out. Bring this down. So we're right in the thick of that 618 right there. So this is what I think Bitcoin's going to do. One way or the other. We're either going to get rejected from here, maybe come back to the Magic Fibo to bounce and go up, or we're going to go breaking out, come back and retest and go up. One way or the other, I still think we either get a correction sooner or we go ripping up and get one later. But I think we're going to do that move before we start getting to our targets. And again, our targets are not 120. That would be the next scenario. We start closing above this zone, then we start targeting 114, 118. And when we finally get above that zone at 120 and higher, that's when the miners are going to go ballistic because of the profit margins. And that sets the tone for us to go to our extension 150 to 160 up here. And this is where we think we're going 150 to 175. So whether we fizzle now and get a retest to go breaking out, and we'll probably, reach up into this zone, get another little retest, and work our way into late fall. That's the plan. I think we're going to top out sometime between September, October. Kind of the plan. That would be the blow off tops with the markets as well, kind of all doing what they need to do. So this is getting ready. Be careful, because what are we looking at from the high to the low? A beautiful 618 retracement we're testing. So this is why we may get a pullback toward the Magic Fibo to bounce and then break it, or we go breaking out and come back and retest the breakout zone. But I don't think we're just going to do this, Mr. Tucson, go straight up into our target zone. It's going to stair step its way. That's typically how it's going to do it. And even as we get up in here, I suspect when we finally get up in there, we'll probably get some sort of little three-wave correction and then pop the next one to push us into late fall, September, October by the latest. So no matter how I slice this, slice and dice Ron Popeil style, all roads lead to that 150 to 175. Amen? And this breakout, this is bullish. You're a little warm and fuzzy here. We still got to clear the last hurdle to set the tone for 114, 118, 120 level. Then up in this zone, I suspect we'll probably get some sort of correction out of that for us to then go ripping up into the 160, 170, 150 to 175 area, which puts us out into September, October. That's kind of the plan. Amen? How cool is that? So, what I'm still concerned with is Ethereum. If Bitcoin gives us that pullback and we don't hold this low, not looking good for Ethereum. But this could be like silver. The coils are coiled up, ready to go ripping. And when Bitcoin starts ripping, maybe it'll finally pull Ethereum with it. But we've been bogging down at that 4,000 level. So if Bitcoin gets to 160, 175, which is the plan, I still think Ethereum's likely going to go back, make a move toward that 4,000. But it's been very discouraging because it just hasn't been able to break out. Even when Bitcoin broke out to all-time highs, we did not break out. We bogged down between the 618, 786 zone. Not good. That's why we got this big push lower. But from the low to the high, we're still holding that zone. So that still allows us with that push to the extensions, but it needs to get its act together. It needs to get its stuff together to start breaking out. So let's see how this plans out. If Bitcoin pullback, we start breaking the low, it is in dangerously low territory for us to go to single digits. Ouch. Ouch, ouch, ouch. Meaning make a new low than this low into single digits. So we really want to see this thing take off. And I'm still holding that I think it's going to, but we shall see. But when Bitcoin gets to where it's going, and it's at that 150 to 175, I'm definitely unloading all of my crypto until our normal cycle, and I'll close with that. That cycle is every 4 years, we have a crypto halving, right? Bitcoin halving. That sets the tone for the bull and the bear markets. You typically bottom every 4 years. We bottomed in 2022. So we expect to bottom after we get to that 150, 175. We expect to bottom in 2026, late 26. Before that halving, we bottomed in 18. Right? So I got to go out here to a weekly so you can see more charting. All the blue lines are the crypto halvings. Halving, halving, halving. Most recent halving in April 2024. And we're looking at next halving in 2028, which is over here. So every time we get a halving, we typically see Bitcoin post-halving 12 to 18 months rally minimum 10x to 20x. So this is where that 15,000 low came in to go to 150 at least. Then you use your Fibonacci high to lows, and you always get at least a 1618 retracement. Other time we got above that, but we always get a 1618 retracement. This one we got a 272, the other one a 1618. So that's where the 175 comes in. That's where my 161 is from the prior high to low, where we should go. So in two parameters. Then every time we bottom 18, 22, back over here was 14, over there, and 14 right there. There's my low, and 14. So we kind of know with Bitcoin, when do we bottom? Every 4 years, 14, 18, 22, 26, 30, that kind of scenario. And then when do we typically top out? 13, 17, 21, 25. Amen? So this is how you manipulate the crypto market to your advantage. So all that means is when we get to that target, we want to sell everything, unload, unless you're just extremely wealthy and you got a ton of Bitcoins that you own in a wallet somewhere, fine. You can hold it. It's going to get ugly because we're going to go from 160, 175 down to about 50,000, 40,000. Somewhere between 50 and 30,000 is the plan. If you can watch it go from 150, 170 down to 50, 40, 30, and without batting an eye, then next halving it should be way up in the stratosphere, and we're talking somewhere in the 2 to 3,000, 100,000 range or more. It depends. We go to 50, 10x would be 500,000. We go to 30, it would be 300,000, right? Just using the 10x scenario, like 15,000 to 150. Amen? So that's what we need to do. And then in the interim, sell everything. Then come late 26, we'll start to nibble. Whether we buy Bitcoin, Solana, whatever you might want to buy, start nibbling in the lows every 4 years. And 18 was a good time to start nibbling. 22 was a great time to start nibbling. And this last one, we expect in 26, we're going to be a good time to start nibbling. And then 28, we have the halving. 12 to 18 months later puts us in the fall of 29, and we start to cycle over. So we'll top out in 25, 29, 17, 13, well, 17 here, 13. So it's roughly every 4 years we top out. Every 4 years we bottom. So 26 will be a great buying opportunity, as late 25s could be a tremendous selling opportunity to get all your profits. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor, and join us again tomorrow. That's it, and that's all.